Okay, so tariff plans are apparently focusing or getting quite a few companies on this side of the border to pivot to a more Canadian focus. Loblaw now says it plans to invest billions to open new stores and renovate current locations. Canadian Tire, meanwhile, offloading its Helly Hansen apparel brand. Let's get more from Bruce Winder, retail analyst and president at Bruce Winder Retail. Bruce, great to see you. Just walk us through these Loblaw plans. Is it going to be still an emphasis on discount retail?
Yeah, thanks for having me on, Andrew. Yeah, it was a big announcement this morning from Loblaw. They're going to spend about $10 billion over 5 years, and some of the highlights of it include 80 new stores this year alone, of which of the 80, 50 are going to be hard discount, which is the No Frills and Maxi chain. So yeah, they're stepping big into the discount segment.
And that's simply because Canadians feel beset by inflation? Well, that's one of the big reasons.
I think so. I think they're reading the room and they realize that, you know what, there's inflation. There could be greater inflation coming if President Trump's tariffs come to fruition and counter tariffs come to fruition from our side. They've also ramped up their spending in pharmacy care stores, so that's interesting too. They're also pushing in that direction, and they're just going to finish off a new automated warehouse too. So lots of capex spending from Loblaw.
I remember reading years ago that in Canada, outside the cities, grocery has always been a discount business, but it looks like that applies within the cities too.
Yeah, I mean, that's the cool thing is that they've been playing around with some different city formats. I know the No Frills banner and recently a T&T banner, who they own as well. So I think there's an opportunity for them to add perhaps more downtown locations and also underserved locations around Canada where Canadians may not have a discount alternative.
They're sure slotting in No Frills locations in Toronto. One just opened about 50 meters away from me right now, and I am seeing them popping up around the city. Canadian Tire, it always seemed like an odd fit that they would own an international outerwear brand like Helly Hansen, so they are divesting it.
Yeah, I was kind of happy to hear that. They got a decent price for it, like 1.2 or 1.3 billion, which is nice, but yeah, when they bought that, I kind of scratched my head a bit saying, hold on, these guys are retailers. Why are they, doing vertical integration and buying a manufacturer? So I think they've done well with it. They increased their sales with it. They increased their EBITDA with it. But time to unload it, and that creates an opportunity to do some debt repayment, share buybacks, and also invest some of it into their business.
Maybe, I'm not sure if we looked at Canadian Tire stock there, CTC.A, maybe over 5 years. And it's interesting, Bruce, do you have any perspective on whether Mark's Work Warehouse is a big profit driver for Canadian Tire?
Yeah, I think it is. I think it's really because Mark's is mostly, if not all, footwear and apparel. And the margins in footwear and apparel are high, much higher than hard lines that you'd find at a Canadian Tire store. And they own a lot of private labels. So, yeah, I see that as a bit of a cash cow.
That's interesting, yeah. And Canadian Tire stock holding up over 5 years, but certainly down from early 2021. Why do you think that is? Why have investors over the past few years been cool on Canadian Tire?
I think that they just had a stellar year. I think it was in 21. Or 20, they had a stellar year when the pandemic was in play. They sold so many bikes and outdoor rec products. They couldn't keep it in stock. And I think they're coming off some hard years like that where they hit a big peak in sales and then they've had the economic issues. Some of what Canadian Tire sells are non-essentials, are discretionary items. And they've had a bit of a hard time with that as well.
Yeah, that's interesting. Yeah, I forgot, of course, people were all into their gardens and their outdoor sports. And the stock peaked in May of 2021.
Exactly.
Just north of 212. So it's come down quite a bit. Canadian Tire, though, are they holding up generally? I mean, Walmart, of course, when Walmart started building out in this country, was seen as a major threat. But Canadian Tire survived.
They did. I remember, they called them a deer in the headlights when they announced Walmart coming in back in '94. But no, they've done well. They reinvented themselves. They got a lot smarter. They diversified. They're holding their own. They're having a bit of a tough time, like I said, because a lot of what they sell are sort of luxury, not luxury, but discretionary items. But they'll be back. Once the economy turns, they'll be back. So I think they're doing pretty good considering all the market environment we face right now.
Bruce, we better leave it there. Thank you very much. It's great to hear from you as ever.
Yeah, you too, Andrew. Have a great day.